Good morning. I'm with Barry Goodman of Birkdale Transition, and we are going to go through Discover together, talk through the Discover report, and then move into the deep dive analysis. So, good morning, Barry. Thank you very much for volunteering to do this with me, and Barry will be providing input, comments, suggestions as we go. Barry is an incredibly experienced business consultant and specifically focused on transition, on exit planning. And he holds the CEPA designation. Barry, any comments you want to make before we get going?
No, I think we're fine.
Okay, excellent. Thanks. Well, I'm going to start by going to my advisor pipeline. Here I've logged into my CoreValue dashboard. You'll see I'm at mycorevalue.com, and on the dashboard, I'm going to invite a person to Discover. So we'll call this person Janice Strong. I haven't Googled that name. If there's a Janice Strong out there, this is purely a coincidence. And for an email, I'm actually going to use my own email address with a. If you're wondering why I put this plus strong, that's because I'm using my own email address, and you can only use your email address once in the CoreValue system. So the system will recognize this as a unique email address. And the plus strong is what makes it unique. Now, we use G Suite or Gmail to host our corporate email, and this plus strong is actually ignored by Google, ignored by the Gmail system, so that these emails will go to my corporate inbox. What we recommend for customers is that they use a Gmail box if they think, we'll see this when we go through the deep dive analysis, but having a Gmail account, which essentially everyone has, that they can use for specific purposes inside the CoreValue system can be very helpful. And I'll start Discover immediately on this computer. I'm going to click Start. There we go. We're into the intake form. And on the intake form, you'll see it's automatically populated Janice's name and email address. She is the CEO. We don't need her phone number, and we're going to agree to the terms of service and privacy policy. Going to get some additional information. So, Barry, what kind of a business is Janice running? You have an industry you want to focus on?
Let's focus on distribution.
Okay, now have I skipped over disty here? There we go. And how many employees does she have?
50.
50 employees. She's in the United States. We could also be in Canada or Australia. And what zip code?
Oh, I don't know. Pick a zip code.
90210. Her revenue, she's in distribution with 50 employees. What's her annual gross revenue?
Let's say it's about 50 million.
Healthy company with net income or EBITDA of
$1 million.
Okay.
Business.
There we go. And Janice is going to be at the table for one of several reasons. And so we'll record her primary objective. And this is data that CoreValue tracks over time. So is she looking to grow? And typically, people are looking to grow. They're preparing to sell their company, or they're looking to strengthen their operations. And what is Janice's hoping to do?
Strengthen my operations.
All right, make her company easier to run. Is she going to need access to more capital?
Yes.
Okay. And does she have a person? This is near and dear to an exit plan heart, but this is really what's fascinating is that both business coaches, financial planners, exit planners focus on this exact question. What's the end game? Does Janice have a personal financial plan that dovetails her business and personal objectives?
No.
Yeah, and more often than not, no is the answer, essentially always. So we'll continue. I'm in a demo area, so now we just have some demo language here. Normally we jump straight into the analysis. So we're going to move into the analysis right now, and slow internet, and we'll start with growth. There are 18 value drivers, and those 18 value drivers measure the ability of the company to grow and to monetize its equity value. And there are 9 market drivers, or forces that work on the company from outside, and 9 operational drivers, or forces that work inside the company. And what we're going to start doing is we're going to start with growth and move all the way through to innovation and do them in a straight line. And what you'll see is that each of the questions is a best practice for that growth and equity value driver. And so we'll start with growth. And it's not good enough to just measure your growth by looking in the mirror, but we want to know if the business has a history of consistent growth greater than its competitors, coupled with projected future revenue growth above the market's rate. And we'll move through the first couple of questions slowly and then pick up the pace. What's important is that we're helping Janice move around the table and look at her company from an acquirer's perspective. In the same way as we would look at, for example, a public company or an investment firm or a buyer, private equity, would look at the subject company. What are they going to expect the company to show them, and how do we make sure that the business is viewed? What is the best practice for the business to present a very low risk profile? Because a low risk profile means a higher multiple, okay? It also means lower interest loans for debt. So does the business have a history of consistent growth greater than its competitors, coupled with projected future revenue growth above the market's rate? And Barry, how's Janice doing?
They're holding steady.
Holding steady. Okay. And you see, by the way, this is how you sit down with a client, and you would read this question with them and have some summary discussion. And the objective is to start getting get a 30,000-foot view of how the company is doing. Now, if I'm going to be acquiring the company, I want to know that it's operating in a large potential market, so that there's room for me to grow. Right? I'm not buying the company for my good health. I'm investing in the company so that I can grow it and get an ROI in my return, which, by the way, is the very reason that companies are founded in the first place. Companies are founded by shareholders and members or partners to deliver a return on their investment in capital and in sweat. So does the market support significant growth of the business?
The market is enormous.
Love that. Does the business own the highest percentage of the available market relative to its competitors? And this would be people against whom they compete, that they can reasonably compete.
They are one of the smaller players.
Okay. Can the business rely on a portion of future revenue from contractually committed customers? And I'd make a comment that it doesn't necessarily need to be a contract per se. For example, with lawn care businesses, Ed Wonke comments on this. Lawn care companies generally don't have contracts. They simply come back year after year and mow the lawn and fertilize and do all of that maintenance. And it's a seasonal business. And they show up one day in the spring, and we're happy to see them. So does this business, this distribution business, rely on a portion of future revenue from contractually committed customers?
They have only a few contracts.
Only a few contracts, or other reasons they could be confident. So they're fighting for it every day. Are there significant obstacles facing a new entrant into the business market?
There's some barriers, some notable barriers.
Has some notable barriers, okay. By the way, you can hear that Barry is busy, or Janice in this case, is busy telling us that the company, a strong distribution, is not top of the charts in many of these value drivers, and has only had one answer at the top of the charts, meaning she's not aligned with best practices, and that is important, and we'll see why in a sec. Does the business have a product or service with unique characteristics that provide a competitive advantage?
We only have a few things that set us apart. A few small things.
Got it. Does the business have a recognizable brand that reinforces the business's presence in the market and supports the company's objectives?
No, our brand isn't very strong at all.
Okay. Does the business enjoy gross and net margins greater than the industry norm?
No, that's one of the reasons why we're here. We're making money, but less than most.
Good. I mean, not good. I'm sorry. We'll work on that. Does the business have a well-diversified customer base?
We could lose a few customers and we'd still be okay.
Now we're moving into, we've finished the market drivers and we're moving into the operational drivers. And by the way, when you're going through this with a client, they'll start supplying somewhere in here. They will in the middle of the market drivers. They'll start relaxing and understanding that we're not going to suddenly throw 3 years of financials on the table and start talking about ratios. We're really talking about the baby, about the business itself and its operations, and how they see their operations doing compared to best standards, just sitting at the table. This is an initial analysis of company strength and value, but it generates some interesting insights and talking points for you to help connect your expertise with with quantifying client problems. So can an outsider easily obtain a holistic understanding of the business, including your business's performance, practices, culture, discipline, and mission?
I don't think it would be easy with some of these.
Wouldn't be easy?
No.
Okay. Are all your company's financial matters in order, and do you follow best practices?
We sort of do an okay job.
The critical question: can the business produce revenue in a proven and systematic way, ensuring the business is sustainable and not simply based on the efforts of individuals within the business today? So the real question here is, do they have a sales and marketing process, or do they have an effective or ineffective sales and marketing team?
We have a sales and marketing process, but really it's more about the success. It's more about our people.
This middle? Okay.
People are very key.
Good. And I'll editorialize, often the CEO, we're motivated when we're running companies, and I'll base this comment on almost 30 years of growing companies. If the sales department is doing their job, it is not a fire, right? It is not one of the many urgent matters to which we need to attend. And so it is easy for the sales team to end up going, they'll sometimes go off the reservation, and because they're hitting their numbers, we don't know that they've stopped following the process. And so it's critical to understand, to manage using operating reports, to understand exactly what sales and marketing are doing, that they're within a process, because process can be analyzed and tweaked. If they're simply out doing whatever they need to do to close deals, that can have negative downstream impact. I'm starting to talk like a banker. That can hurt the company. Okay, operations. Does the business have the ability to deliver on sales promises made to the marketplace and to deliver in a systematic and process-driven manner?
We can definitely do a better job.
Janice needs some help. Does the business track and use key measures to meet customer expectations at all levels?
We don't track anything. So
we really don't know. Okay, continue. Senior management. Does Janice have a leadership team in place to realize the business's vision and mission? Now you notice this is the second time vision and mission come up. Does the company even have a vision and mission while helping Janice achieve her objectives? Meaning the owner means the shareholders achieve their objectives. And here we're going back to that long-term ends. What's the end game? So does the business have a leadership team in place to realize the vision and mission and help the shareholders achieve their objectives?
Well, we have a management team in place. I don't know how good it might be compared to other companies, but we don't have a vision and mission.
Okay. So do you think it would be our management team isn't always clicking, or we don't really have a management team, or they're dysfunctional?
I think they're kind of dysfunctional.
Okay. HR, people, critical element. Does your business have the ability to find, develop, and retain quality individuals that enable success in all aspects of the business?
We have some very long-standing employees.
Okay. Now, if we're trying to make the company easier to run, you think you're doing a pretty good job in that department?
No, I think we're okay.
We're okay. Legal. Do you have all legal matters in order, documented, and does the business follow best legal practices?
Yes, we're buttoned up in that area.
Okay, good. No litigation out there?
No litigation at all.
Does your business understand that innovation is invaluable to creating an ongoing competitive advantage? Does it have a proven and systematic way to drive and capture innovation at all levels? And does it encourage innovation in every area of the business? Are you getting ideas on innovation from employees, from suppliers, distributors, customers?
We look at new ideas, but really we stick with what's working.
Okay.
If broken, don't fix it.
That's, by the way, is a fairly typical answer. So I'm going to click continue. You'll notice that we're at the end of the 18 questions. I will click continue, and the CoreValue software will immediately generate a report. Okay, and your logo as an advisor is up here. So Birkdale Advisors would be here across the top. We should have done this in your agency, Barry. And we have the information about the company. Why are they at the table? Now, what do we know at the end of a 10-minute, 15-minute conversation? And this is the reason, if you look at the engagement proposal in the resources tab on the CoreValue website, this is the reason that engagements, that these meetings, it may take 10 or 15 minutes to go through Discover, but then we can take another period of time, half an hour, 45 minutes or more, to talk through what we've learned about the company. And importantly, to talk through some of the, now that we have a view of the totality of their operations, talk about how they play together and where the strength and weakness in the company may present bottlenecks to making the company easier to run. So I'm going to start, I'll go north to south on this report and talk about what the CoreValue software has calculated. Because it's calculated some key insights, analyzed some key insights. So number one, this business, if it was a best-in-class operation, if it could get the top end of the range of multiples based on its revenues, would be $12.1 million. But because you notice that Janice rated herself below best practice in most of the 18 value drivers, which is fairly common, that is risk to the business, and that risk will be rewarded by the risk equals discounts. Valuation 101. So based on the answers she provided, we know that $4.2 to $7.8 million of this $12 million is at risk. We're in a range. We've only asked one question on each of the 18 value drivers, meaning the enterprise value, the value that someone might pay for the business today after completing due diligence, is approximately $6 million. So more or less 50% of the equity value of the business is at risk. Why is that? Well, again, we're having an initial conversation. Imagine that you're sitting in a restaurant or in your offices. And Barry, I'd love to hear your comment on where and how you use Discover. And we're not going to walk through all 18 of the value drivers now from an analysis perspective, but we should be able to discuss the top 3 bottlenecks to growth and equity value. And those are operations, recurring revenue, and financial systems. And we can go back and click on answers you provided. And for example, we'll scroll down to operations. Your company has the ability to deliver on the sales promises made to the market in a systematic and process-driven manner. And this company has answered, we could do a better job. For a distribution company or a manufacturing company, that is a critical area on which we need to focus. So, Barry, any comments at this point?
No, I think it's very valuable to give a high level and point out at a high level where there's improvements and opportunities.
Absolutely. And if we want to make this company easier to run, getting operations in line, it stands to reason. This is going to be what keeps Janice up at night.
Yes, that's a key element. And going back to one of your comments, I never meet with clients in restaurants.
Oh, interesting. Got it.
Because you don't know who's at the next table. These are all very private conversations that I have with them.
That is true. That is true. And some of your colleagues have noted that it's helpful to get them out of their own offices if possible. Do you find that to be helpful to get them away from the whirlwind of every day and to really focus on this as an important conversation?
Oh yes, definitely. The more you can get them to focus on the conversation, the better. So if I do meet with somebody in a restaurant, I make sure that it's really off to the side, because you never know who's at the next table or who else is in the restaurant.
Got it. And that's a great point. That is a great point. Interesting, because you have some colleagues who really like to do it in a restaurant. I did the example I always use, and shame on me, I'm an attorney, I should have thought of this. Well, I won't digress, but that's a great point, Barry. That's a great point.
You could have a competitor sitting in the restaurant that knows, and rumors within industries travel very quickly.
Oh yeah, they do. The Jungle Tom Toms, absolutely. Yeah, absolutely. Very effective. Very effective. The rumor mill is quick and cold-hearted. So we're going to provide some high-level benchmarking. So here we have the other players in this industry. Over 25,000 companies have been analyzed using CoreValue. These gray bars are where they fall from very well run to very loosely run. And here in this range, it's key with this report to understand that we're looking not at the height, but at the range. And range is hard to communicate, but we're left to right is where you should be focusing. So we're down here underperforming the industry in operations. Recurring revenue, the same is true. We're underperforming the industry. And these are helpful talking points, because you can say, Janice, what we should do is analyze why your operations and in what specific ways is your operations not up to even the median of your industry. And there are probably some relatively straightforward areas on which we could focus once we have a more complete understanding of this gap. That'll help, that'll start making this company easier to run. Let's strengthen your operations. Recurring revenue, same, and the financial driver, underperforming significantly. Okay, this is an area that's very important. Now, when we go through the deep dive analysis, we're going to carve up financial driver and really put the subcomponents of a good financial system under the microscope and decide which ones are a high priority and which ones are a lower priority for this owner. This core value rating. Think of this as a confidence index from 0 to 10. How confident are we in this company's ability to generate revenue and profit going into the future? How confident are we that this company can operate smoothly going into the future? And Janice gave us several, twos and ones, if you will, bottom of the rating scale answers. And so the typical company it has a core value rating, the average company of 5.7. And it fluctuates a little bit, obviously, over time, but let's just call it 5.7. Janice has come in somewhere between a 3.7 and a 4.7. Again, ignore the height. We're in this range. We've only asked one question on each of the 18 value drivers. So let's call her a 4.2, okay, a 42. That means we can be, let's use an analogy, we can be 42% confident of this company's ability to generate revenue and profit going into the future. And if I can only be 42% confident of this company's ability, where's that going to put them on the range of values? Are they even able to get to the transaction table to have a conversation about range of values? Or is this company, not in any way, shape, or form going to be able, at some point in the future, the way it's run today, to monetize its value? And I'll tell you, the range of values, think in terms of the high eights and low nines, there are tens. The high eights and low nines are top end of the range of value. Your sevens are the bottom end of the range of values. And if you're below a seven, barring a strategic acquisition or liquidation, this company is probably cannot monetize its value. And we need to have a different conversation. Now, we're not going to focus on monetization. What we're going to focus on is making this company easier to run, because that's what's motivating Janice and why she is willing to invest time and treasure in your services. I'm going to scroll down. One more thing that the CoreValue software has analyzed are red flags. And think of red flags as deal killers, okay? Red flag threats to some or all of the growth potential and equity value of the business. Senior management, there are 3 potential red flags. This company doesn't have a senior management team, and we can go back and look at the answers they provided. Company overview, also. They don't communicate with the market well enough. These 2 red flags mean that the company is going to have some significant bottlenecks to its ability to grow. They don't have a vision and mission, right? So they don't have a strategic goal. Therefore, they likely don't have a strategic plan. And you can analyze that backwards. So red flags are also a critical area to identify. The most common red flags in the system are senior management, typically the octopus CEO in middle market companies, without whom the company cannot operate smoothly, and litigation. So we can have we have several talking points now with Janice about, listen, if you want to make your company easier to run, you can ask questions such as, Janice, let's say we got your operations, we improved your operations to the point where we have a written process, and at least operational delivery is predictable. I'm not going to say that it excels, but it has at least become documented and predictable. What impact do you think that would have on your business? And now now Janice is engaging, and she's visualizing the future state. Same with recurring revenue. If we can generate recurring revenue, what do you have any ideas on how you would generate recurring revenue? What do you see in your industry? There are a bunch of questions. We're going to ask big, wide open questions, not the closed yes/no binary questions. And now we're having the right conversation. And by the way, it is not a struggle. I've done this, and I'm going to ask Barry to comment in a second. I've done this with individual CEOs, typically sitting with one of you as a sort of coach, second chair in these conversations. I've also done this with rooms full of CEOs. Same, we can use Discover with a group of CEOs, for example, in a Vistage meeting. And these conversations, these are not hard to get going, because based on the 18 areas we just talked about, people are really engaged. And Barry, what do you experience when you use Discover? I'm not looking, maybe you don't have the same outlook. I'm not sandbagging, but what do you find when you use Discover?
Well, they're very engaged, in the conversation. And when you get to the conversation, let's say take recurring revenue, and you're asking them follow-up questions that you illustrated, it gets them, gets their imagination going, how else they can, or how they can develop recurring revenue. So this is a great engagement tool as an initial step. But I get into some fairly detailed conversations. Therefore, the get through it takes a lot longer, but it really creates some value to either the prospect or the client.
Yeah, absolutely. Absolutely. And these conversations have a high conversion rate into a subsequent conversation and into a longer meeting. Hey, Janice, do you think it would be helpful if we analyzed, if we had a holistic understanding of your business at a more detailed level? And as a service, we offer a deep dive analysis. Would that be helpful to? Do you think that additional analysis would be helpful? But there are a number of ways to approach it. But the reality is that deep dive analysis does identify, lay the groundwork from which you can create a plan to help your client reach their goals. So if this company wants to get easier to run, have operational excellence, then that detailed analysis across all 18 of the value drivers is key, and it differentiates you. So Barry is sitting and asking questions about the whole company, and he's therefore subliminally, if you will, positioning himself as an expert on analyzing the entire company and not getting pigeonholed as a financial planner or as an accountant or as a management consultant who's really, as an operations expert, which he may well be, or financial may well be, but from a holistic perspective, a macro perspective across the company. And in my experience, and Barry, I'd love to hear your comments. In my experience, that really changes the client's perception of your role and elevates you to peer status with them.
Exactly. And my background is in accounting. I'm a CPA, but if you start getting into these questions, it takes you out of being pigeonholed into a certain profession or certain area. But one thing I also want to mention is oftentimes I will have this discussion with key members of the management team. And it's interesting for the owner to sit back and listen to the management team answer these questions, and what their perspectives are. And that also from a sales standpoint, as an advisor, there's some pressure on the owner to engage and to move forward.
That's a great point.
We're making it kind of fun for the organization as a whole.
Absolutely. And you can specifically use Discover. You can run through it with the owner or the CEO and then send links, to the management team, or give the CEO a link that they can send to their senior management team and say, hey, go through this, love your candid input. And then we'll sit down and we're going to sit down with Barry and talk about what we've learned and how each of you, I value how each of you see the company and your unique perspectives, because it could be that that sales thinks they're doing a great job and operations is screaming bloody murder about what sales is selling. You never know what you're going to find, but typically there's alignment in some areas, a few, but there's a great conversation to be had, to Barry's point, across other key areas of the business.
Right.
Yeah. Hey Barry, we just covered Discover, and I know we were going to jump into the deep dive, but I think this is a good place to stop this recording, and then we'll start again with the deep dive analysis, okay?
Okay.
Stop recording.